Bloomberg Audio Studios.
Podcasts, radio, news.
From the heart of where innovation, money, and power collide in Silicon Valley and beyond, this is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Welcome to Bloomberg Technology. I'm Caroline Hyde in Bloomberg's world headquarters in New York. There is a lot to get to this hour. But let's start with some of the political turmoil in France. That no confidence vote that could topple the country's current government. Bloomberg's Caroline Conan is there for the latest in Paris. Debate finally getting underway, but for our global audience and our technology audience, Caroline, fill us in on what we expect in the next hour or so.
So the debate just started right here behind me inside the National Assembly. You've got Éric Coquerel at the moment speaking. He is the leader of the far left group in the National Assembly. And this is the group that is proposing this motion of no confidence in order to topple Michel Barnier's government and make Michel Barnier's government collapse. That vote could happen in the next couple of hours. And we're pretty sure of the outcome as we speak, given the National Rally, so the far-right party of Marine Le Pen, has said that they will back this motion of no confidence, even if it was presented by the far left. So the two extremes joining forces in order to overthrow this Barnier government.
We can see the impact on the euro. We've seen the impact on the price of French debt. But for those that are running businesses, for a technology audience that cares about the French technology startups, for example, what does a change or collapsing government mean for them?
Of course, the main question is, are we going to have a 2025 budget, and what is left in this budget? There will probably be some special laws in order to roll over the 2024 budget, but that means a lot of help and, for example, a reduction of contributions from companies in order to hire lowest income employees. These are not going to be automatically indexed on inflation, meaning that it's going to be harder, it's going to cost more for those companies to hire some of those employees. So technically, in the short term, it's a little unclear, but in the longer term, if there is still no budget over the next few weeks before the end of December, that will have a big impact on companies. Because we'll have this 2024 budget staying the same without any increase.
Caroline, we thank you so much for the latest from Paris. We'll come back to you on any of the breaking news. But first, let's get a check on the markets, because despite political turmoil worldwide, it feels often, the Nasdaq is at a record high, the S&P is at a record high, and we have tech to thank for it. In large part, we see Salesforce also at a record high, up 8.7% off the back of its earnings, really managing to pull out the power from its AI agent force focus. We're looking at Okta. This is an application software company, also rising at one point up more than 13%. We're now up 5% on the back of a beat and raise for its earnings after the bell yesterday. And Marvell Technology, it's now up some 20%, soaring it as well to a record high. This is the chip company, had better than expected results and stronger earnings forecast as well. What's notable is also Marvell's CEO, Matt Murphy, said on the call that he is committed to the company despite being a potential contender, we understand, to lead Intel. And that is where we want to go next, because Intel's search for a new CEO is the focus for many at the moment. And is it going to be focusing heavily on outsiders? The chip maker is considering candidates such as Matt Murphy, but also the former Cadence Design Systems CEO, Lip Bhutan, who actually recently quit the board of Intel. Let's bring in Bloomberg's Ryan Gold for more. Ryan, is it surprising to see Intel not go to its own bench?
Caroline, I think it is. When you think this is the first time since 1968 when Intel was founded that they will actually sort of think about looking outside, I think that kind of gets to the heart of what it means to be in semiconductors right now. Semiconductors takes a lot of expertise, it takes a lot of nous, and some of the decisions that were made, over the years, under Pat and even under Bob Swan, Krasnich before him, these are decisions that will pay if you make them right in 10 years' time. That's how long it takes to get some things over the line in semiconductors, and to go out and think about who your next CEO is, it's not an easy task.
Well, many are going to look that Pat Gelsinger didn't actually get that much time. He came from VMware EMC, but he was, in many ways, an Intel lifer. He'd started his career there. And what, therefore, is really the attractiveness of this role at the moment? Marvell, for example, Matt Murphy doing a great job showing the power of AI strategy. Is it not going to be that appetizing a role to be taking on right now?
I think it could be a poison chalice. I think some people do view it as a poison chalice, just given the challenges. Because when you think about AMD, for instance, a big rival to Intel, it made the decision to go fabless years and years ago.
Yeah.
Intel is still, it's still a fab chip company.
They're trying to be more of a fab.
Exactly, and rival TSMC, and we all know how that went. So whoever comes in has a massive challenge on their hands. That said, though, the fact that we reported yesterday that Matt Murphy is being considered, Lip-Bu Tan being considered. Let's remember that Lip-Bu is a big advocate for making Intel more sort of industrially manufacturing sound. So that could be interesting, but there are many others too, because we're told, for instance, when we talk to sources, that anyone who puts their hand up who has a remote degree of expertise in semiconductors will likely be considered. And I can tell you that Spencer Stewart, that's running the process to hire the new CEO right now, they're saying that we're probably going to look for 4 or 5 candidates and then shortlist to 1 to 2. Which
Do we get a time frame?
I think they're looking to this as soon as possible.
Ryan, keeping us up to speed. We thank you, Ryan Gould, there. Meanwhile, let's just get a deeper look at the chip space, tech market more broadly. Tony Wong of T. Rowe Price is with us, managing the Science and Technology Fund, more than $9 billion under management there. And basically, you look like you're in every chip name apart from Intel in many ways, Tony. Is that right? And how are you looking at the ecosystem and its strength?
Yeah, I think that's a great question. When you look at our holdings, we currently are focused on the compute aspect of things. And so looking at AI, Nvidia is a big holding, as well as Marvell and Broadcom. My view is that the compute TAM is growing significantly as the foundational models are kind of growing exponentially every year. And so the chip companies that have the scale, the expertise to tape out the leading edge, are, I think, going to be advantageous in terms of capturing this compute TAM. So I think, I like the space long term, but, we are selective in our holdings here. Specifically those 3 especially.
Well, let's talk about Marvell, for example. Would it be a worry if the leader did jump ship to Intel?
Well, I think Matt Murphy has created a ton of value over the years. You look at when they picked it up, it was in the kind of a sub $10 billion market cap. And he's, over the years, done a lot of great M&A and capital allocation, spun businesses off, acquired a world-class custom team that is right now delivering a lot of the AI custom compute chips for the likes of Amazon, for example. And so, I think that it would be a concern if he jumped ship. I do think it's he's put a lot of work into Marvell. He's got a great team there, and they're kind of firing on all cylinders coming out of the last few years. So, from my perspective, it seems like he does have a lot of good reasons to stay at Marvell, and so I'm taking his word, what he said last night, kind of at face value here.
Looking at your top 10 holdings, Marvell is one of them. At the end of October, is about 2% of the fund. The top holding is Nvidia, as you mentioned. Interestingly, we had AWS CEO Matt Garman on the show, on the Pro across our network yesterday, and we're going to be playing out a bit of that sound later. But Amazon is the best points contributor to the NASDAQ today. They had a whole raft of chip announcements. What does that mean for Nvidia? What does it mean in terms of their own customers building custom silicon?
Yeah, I don't think that story is anything new. It's just generally the evolution of compute. Essentially, you have the new workloads that need more general purpose NVIDIA chips. And then over time, as the workloads get bigger and they mature and stabilize, you kind of bring in the custom compute. And so, I think the two kind of coexist, and they have coexisted over the last decade. And so going forward, I think of them as kind of symbiotic relationship in some ways, and that it is just an evidence that the chip kind of TAM is increasing, the compute TAM and the demands continue to increase because the workloads are getting so big. Then it makes sense to have a custom chip. But what's special is that previously, kind of 5-10 years ago, we thought AI would just be subject to just only identifying what's a cat and what's not a cat image. And so now it's transformed into something that no one could have thought about or predicted. So, I think that it's just, we've had this debate before of but I think what you've seen is that both kind of NVIDIA and the custom chip providers have done well as the TAM has increased.
I am not a cat forever to be part of internet's story. What then about Nvidia's valuation at these levels? You're talking about how finally we're getting the return on investment from an application layer perspective of AI. We're actually using it in our everyday life, our work life. Can Nvidia grow in terms of its own valuation, or have we priced it all in?
Yeah, I think that's a great question. I mean, $3.34 trillion, that's market cap right now, is pretty astounding. If you look at like the profitability and the free cash flow, I mean, it's kind of pretty reasonable, like 35 times forward earnings. And so while the stock price has gone up a lot, I think that when you look at valuation, it's not extreme. It's not at 100 times earnings, which I think that says the market is saying there is a little bit of concern of like how sustainable the numbers are, whether profitability can continue to be at these levels. And so, you know, I think the valuation at face value is actually relatively moderate, you know, given its history and its growth.
It is extraordinary just to take a step back and think that on this day we're at a record high for the Nasdaq 100. Apple's at a record high. We've got Nvidia continuing to rise in terms of market cap. And then you have the Salesforce numbers and its own record high in terms of share price today. What do you make of their application of AI agent force and whether actually it's going to make them more profitable as well as getting revenue off the ground?
Yeah, I think it's an exciting time in tech in that, you know, AI could be this next productivity revolution. And so, you know, kind of uncapping labor as we know it with digital agents and digital labor that essentially doesn't need to sleep, doesn't need to take breaks, operate 24/7, and can operate alongside humans. And so I think that's what's really exciting. And all these software companies are now kind of seeing the opportunity and going after it, and everyone wants to be the platform where you store your data, you operate, and so whether that's Microsoft, ServiceNow, you know, Salesforce, like I think it's a big opportunity. And so we've kind of seen, you know, the first year of ChatGPT or two be dominated by the chip companies like Nvidia, dominating the infrastructure layer. And so now I think that we're seeing it on the app layer, which is really exciting because you need to see it in the app layer for kind of the chip companies to continue doing well. And, you know, I think we are kind of seeing that in the last kind of earnings season.
Again, we've seen that shift, as you say, movement from all in on chips, then shifting into software. But boy, is it playing out in some of the valuations. I'm looking at Palantir trading at 180 times future earnings. That had been the darling of the AI story. Will other companies rip to get to those sorts of valuation levels? Or is Palantir sort of overdone as well? You talk about how we're at this crucial moment where AI is going to disrupt the workforce, but I feel that the market's been trying to price that in for quite a while.
Yeah, absolutely. And I think that not every company can be like what Palantir is doing. I think to do AI is really, really hard. And they've been the AI leader for the last decade. And I think of them bringing AI to the government and the enterprise. And so I think what's special about them is that they've got this like very centralized ontology for AI, and then they can kind of customize that for clients, and clients can build on that. So I think them as like a platform, and you think about what the United States government is trying to doing now is to be more efficient. And part of that is bringing AI and technology to automate things and to modernize people's processing and data. And so I don't think every company can be like Palantir. I think there's like some special ones in kind of the AI software kind of mid-caps area, like, you know, kind of like AppLovin, for example, or Axon. I like, you know, where there's like specific vertical applications where AI can be applied and really drive a lot of automation and intelligence.
I love that you take us out to some of the different names as well. Tony Wang of T. Rowe Price, brilliant to have you on. Thank you. Last week, Bloomberg reported that the FTC is investigating into Microsoft, which is focusing on how the tech giant is bundling its Windows operating system with other software, as well as its dominance in cybersecurity. Now, reports from The Information are saying that the agency is asking about Microsoft's deal with OpenAI, which grants, of course, the cloud giant the exclusive right to run the startup models on the cloud servers, as well as a cut of the company's revenue. Antitrust lawyer David Balto joins us now. He previously worked as former policy director of the FTC's Bureau of Competition, someone who's well versed in how long these investigations could go on and with what right they take. So the way in which the FTC is pursuing Microsoft, does it seem significant to you?
I think it's very important. You know, the Microsoft case brought by the Department of Justice in the late 1990s was critical to the expansion and growth of the internet. Many of the things that we benefit from in competition on the internet are specifically because of that earlier case.
What's interesting is, of course, we've heard back from the Microsoft Deputy General Counsel, Rima Aleli, who put on LinkedIn saying on behalf of Microsoft, the FTC Inspector General, to investigate whether the FTC management improperly leaked confidential information about a potential antitrust investigation. How do you see these sorts of investigations evolving and becoming publicly known before indeed Microsoft has a chance to ultimately lead the way here?
I'm extraordinarily skeptical about whether or not the agency there would be some kind of leak from the agency. That's extraordinarily unusual. Third parties, however, who receive civil investigative demands can disclose whatever they want. And maybe this is a situation where one of those parties disclosed information to the press about the requests they had received from the FTC.
Of course, this is wide-ranging, it would seem. Bloomberg initially reporting on how it's going to be focusing on the way they intertwine their operating system and also their dominance in cybersecurity. Now the information talking about the OpenAI Microsoft deal. I want you to just take a listen to a conversation I had with the AWS CEO yesterday, Matt Garman, talking about how he'd like to offer his own AWS clients access to OpenAI models, but can't at the moment. Just take a listen.
I believe that we would love OpenAI models inside of AWS. We'd absolutely. It's we listen to our customers, and if that's something that customers want, we're absolutely game. Obviously, with a partnership, it takes multiple sources, and there's probably some complexities in there, as you allude to. But I think in the fullness of time, it likely is the case.
So therein lies some of the issue that maybe the FTC is investigating, this relationship with OpenAI and Microsoft and whether it should be indeed broken open a little. It seems as though Matt Garman is positive that it will. Do you think that ultimately that will be done by self-regulation or actual FTC regulation?
No, I think the FTC is going to take a serious look at this relationship and the potential of that relationship to foreclose other forms of competition, other rivals. They're going to take a very close look at the nature of the agreement between OpenAI and Microsoft.
Do you think, though, that a lot of these cloud companies are having particular relationships with some of these very powerful generative AI models? Is that something that's generally going to be looked at across the board?
Yes, but it's always important to realize that Microsoft is dominant. They're dominant in cloud computing. They're dominant in certain software categories, vital software categories. And when a firm takes that dominance and extends that dominance to other product markets and forecloses competition in those markets, that violates the antitrust laws.
I feel, though, AWS would have something to say about Azure being all that dominant. They feel that they own a lot of the market. I'm sure that even other areas, Oracle feels that they got a key stake, Google as well. Can you have broader provision, less oligopoly-like cloud operations when this ultimately is incredibly expensive to offer?
I think that's one of the considerations that's kept in mind here. But we see many markets where there are not contractual arrangements that foreclose competition, where competition flourishes. And it's specifically those arrangements, like the arrangement between Microsoft and OpenAI, that will receive intense scrutiny. Especially because Microsoft is so dominant in cloud computing.
And dominant in cybersecurity, and in many ways, the reporting is such that this investigation started because some of the failings to do with cyber when it came to federal provision. Is that what sparked all of this, David? How do you think this is going to weather a transition into a new administration?
First of all, that suggests one of the real advantages of having a federal trade commission that deals with both consumer protection issues the failure to provide cybersecurity adequately, and competition issues. I think this is an investigation that won't lose any steam in a new Trump administration. The kinds of legal issues here about when bundling is legal and illegal, I think there's a pretty strong consensus between Republican and Democratic antitrust enforcers. So I expect this investigation will go full throttle in the next administration.
David Balto, former policy director of the Bureau of Competition at the FTC. Thank you for your time. Now coming up, David Ellison is eyeing big changes to Paramount. More on that next. This is Bloomberg Technology. Time now for Talking Tech. First up, big changes may be coming to Paramount Global. According to sources, expected CEO David Ellison is exploring combining Paramount's TV units, investing more into streaming, and overhauling its top management. This is all expected to come when its merger with Skydance is finalized next year. Plus, Meta is looking towards nuclear energy to fuel its AI ambitions. The parent company of Facebook is asking developers to submit proposals to deliver 1 to 4 gigawatts reactors starting in early 2030. For scale, 1 gigawatt of electricity is enough to power 750,000 typical homes. And billionaire Xavier Niel's Iliad is set to sell half of its data center business to French infrastructure fund Infravia Capital Partners. And the company is in exclusive talks to sell 50% stake in Iliad's OpCore for a total enterprise value of $904 million. Coming up, plenty more when it comes to data centers. My conversation with Amazon Web Services CEO Matt Garman on the company's major plans for AI. What's going to power it? That's next. This is Bloomberg Technology. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. A quick check on these markets that are at new record highs. The Nasdaq, the S&P 500, Apple's at a record, Amazon's at a record. You've got across the board the key companies that are coming out with earnings also raising to new record highs. Marvell coming out with its numbers that beat and raised, and we see it at a record high, and so is Salesforce. So move on as the Nasdaq 100 goes up 0.9%. We in large part are being helped by the latest numbers out of CRM. Salesforce up 9%. Of course, it's third quarter earnings looking strong. This is as AI agent force comes through with a bang. They're adding 1,000 people to go out and sell this in particular, but we're seeing 8% growth in their earnings as well in terms of revenue. Let's break it all down with Bloomberg Intelligence analyst Anurag Rana. And I mean, many were questioning the valuation, the share price of Salesforce going into this earnings report, but they managed to vindicate it.
Yeah, Caroline, if you look at the results, the margin number was above expectations. But other than that, everything else was generally in line to what people were expecting. But I think the real push is people are really buying Mark Benioff's agent force story and the potential for that down the road to add revenue. It's not going to add revenue for the next 12 months to a point where it's going to move the needle. But I think after that, it should start to add, a good momentum to the overall revenue base.
Executive VP Mike Spencer saying it was, quote, a good number of the amount of deals that they signed with Agent Force. What do the good numbers look like, do you think?
Yeah, on the call they said something about 200 deals or so, but at the same time, those 200 deals are not moving the needle when it comes to the bookings data, and we don't think that's going to happen. I think what you're seeing right now is a lot of value realization by the street that says, okay, at the end of the day, Salesforce is going to be a net beneficiary of Gen AI. I think this is the biggest discussion around almost the entire software space is what companies will benefit over the next 2 to 3 years or longer, and which one's going to be, not so much. And I think that's where Salesforce is. People are getting convinced that, they have their act together.
Because previously, people were worried about that act, right, Anurag? We were seeing a concern around Mark Benioff's desire to keep on doing M&A, perhaps not thinking about profitability. They made big layoffs. They've streamlined the business. But then they're still splashing $344 million on Zoomin startup acquisition. Do you still like them adding on, tucking in where they can?
Yeah, the small acquisitions don't bother me one bit because that doesn't really impact the free cash flow. It's really the big ones that worry because that's going to change the momentum of the margin improvement. We just looked at it the day he announced that it's not going to be any more M&A, it's going to focus on margins. Just from that point till today, their margins have gone up by 10 percentage points. That's a very big number by any standard. And frankly speaking, when you look at a company like Microsoft or Oracle, Salesforce has a long way to go before it can reach those numbers. So there is still more potential for margin improvement. As long as they can get their organic growth rate up, people will like it.
Operating margin, I think, coming in at about 33.1%. Anurag, what of Microsoft? What of competitors in this agent offering and co-pilot offering that we hear so much about?
So when you look at Salesforce, two of their biggest products are Sales Cloud and Service Cloud. Service Cloud is a lot to depend on people who are looking at back office and customer support functions. This is where the agents are really going to benefit because think about it. If you are calling a human to get transaction done or taking care of your work, it's going to cost the company or the end market, whether it's an airline or a phone company, a lot of money. If you can get that done through an automated chatbot, that can actually execute the operation for you, that can change your phone plan without getting a human being involved, that can return your stuff and refund you the money without getting any human involved in it, that's a very big cost benefit for the end customer. And that's really where Salesforce is going right now.
Bloomberg Intelligence analyst Anurag Rana, thank you so much. Talking of application of AI, Amazon is trading at a record high today after its cloud division's annual reInvent conference. And it rolled out there yesterday powerful new chip arrays, a large language model to compete with leading rivals. And Matt Garman, AWS CEO, joined us after his stage appearance. And we started discussing the massive cluster of homegrown chips he says will quintuple the processing power for its AI partner, Anthropic. Take a listen.
That is the first innovation, is our Amazon-designed custom silicon that gives us really unparalleled performance for generative AI capabilities. And then we build these together with high-performance networking that we also build in-house. And then, of course, there'll be cooling and heating and power that we need to go build the data centers. But it really starts with that silicon down at the level, and we innovate on the entire stack of AI to make sure that we can control everything that goes into those clusters.
Can you talk to us a little bit, compare and contrast here? This is about less dependency on Nvidia GPUs to many ways, doing an alternative for your clients. What sort of cost saving will clients get? What sort of energy and efficiency will they get?
Yeah, well, first of all, I think we like to think of it as a supplement to NVIDIA GPUs. NVIDIA has a fantastic product. That team has done an outstanding job executing, and we think that the vast majority of workloads are going to continue to run in NVIDIA processors for a long time. But customers want choice, and they want choice that can give them some lower cost options. And we think that for certain workloads, for many workloads, Trainium 2 can give customers 30 to 40% cost performance benefits over today's GPU-powered instances. And so we think that that's a huge win for customers, particularly as they're looking to lower the cost of generative AI workloads. But we'll be great partners with NVIDIA and continue to lean in on building great technologies together with them for a long time.
Trainium 2 available, Trainium 3 in the works, and all of this is, as NVIDIA at the moment, it's estimated, has about 95% market share. Do you agree with that sort of number they have, and what sort of area do you think that will come down to?
Yeah, I mean, I think it's probably higher than that. I think the vast majority of workloads in generative AI today run on NVIDIA technology, and they've absolutely been the leaders in that space. But we do think we hear from customers that they want choice. And just with our processors, where we're tight partners with Intel and with AMD, but we decided to go build a general purpose processor called Graviton, and it's been hugely successful with our customers. But we also provide lots of Intel and lots of AMD processors in our cloud today, and those businesses continue to grow. So I expect that our usage of NVIDIA will continue to grow from our customers, and that choice is really going to be powerful. And as you see this explosion of generative AI usage, I think there's going to be plenty of business for multiple different people to be successful.
A key partner is Intel. How concerned have you been about the change at the top?
Oh, it's okay. I wish Pat the best. He's I know Pat, and he's been a good partner of ours. But we've been partners with Intel for a long time. It's been 18 years since we launched our first Intel instance when AWS and EC2 first launched, and we'll continue to be great partners with Intel, and they have a great technology team there, and we look forward to continuing to roll out the latest technologies from Intel for our customers to be able to use.
And you've been continuing to roll out, as you say, Nvidia offerings. Last time you were on, we were talking about Blackwell, of course. Many have been frustrated, perhaps by some slowness to market there. When do you anticipate that Blackwell will be unfolding, and how difficult has it been to ensure the supply side is there?
Well, they've obviously had some manufacturing things that they're going through, but we're very excited about it. I think the early returns and the early looks at Blackwell look fantastic. We expect almost a 2.5 times gain in the compute power that you get from Blackwell that we saw from H100s. And so I think it'll be a really material jump for customers once we get those out. And I think those will be early next year. And we're excited about putting them in customers' hands. And we'll get them out there as soon as they're available.
Investors, though, they find it wild, this whole frenemy existence that's going on. You truly think that investors here think, oh, we want to see Nvidia dependency as well as AWS having its own offerings? Is that something you think everyone can swallow, or do you think ultimately there will be a broadening out other than just Nvidia winning all?
I do think it's a partner. Like, if you think about AWS, we started from the very beginning thinking about this partnership mindset. And we built the entire business around AWS, thinking about how AWS would have services and our partners would have services, and that there's plenty of space for all of us to really grow and build our businesses. And that is true for software providers. It's true for service providers, and it's true for technology providers. And so I think that we've proven time and time again over the last 18 years that AWS can have products and our partners can have products, and then as we make them all available, that the whole pie gets bigger. And so I think there's plenty of opportunity for both. And so it really isn't. I think it makes for a fun narrative that it's either or. But we're great partners with Nvidia. We will continue to be. And this is all about making the pie get bigger.
Fighting the frenemy discussion, my conversation with AWS CEO Matt Garman. Coming up, plenty more on AI and the investment opportunities. Lily Lyman, _VC Managing Partner, going to be joining us. This is Bloomberg Technology.